All right, everybody, welcome to another edition of Market Talks with Dr. Stoxx. It is October 28th, just 8 short days before the election this year, 2024. I'm coming to you live from the live trading room over in Discord. And if you're interested in that, you can go to drstoxx.com, drstoxx.com, and click on this live trading button, and you'll be taken to a site where you can then join us. So we've got a good group, 250 or so, some odd traders who join me each day, each trading day. I jump in about 8:30, 8:45. I'm on board till 4:30, 5 o'clock. Take a little bit of a lunch break in between, but we do some trading. Anything that I'm trading, I say, here's what I'm buying, where I bought it, where I'm putting my stop, where I'm going to take profits. Here's why I am in this trade, and on and on. So if you're interested in that, join us in the live trading room. Otherwise, you can click on the subscribe button, and you'll see some of our weekly and daily stock market advisory letters. And if you want to learn how to trade, click on the webinars button. All right, enough of that. So let's take a look at some charts. So we're going to start with the index page, and we've got the futures up on top, mostly green today, but not real big. Led higher today by the small caps, which is what we always want to see, right? It's a good thing when you see the NASDAQ 100 leading the way higher. That's also good, but usually that means that it's just 7 or 8 stocks at the top of that weighted index that are doing really well, and who knows what's going on down below the surface. But when you see small caps, the Russell 2000 leading the way higher, there's no way of fudging that because it's such a massive index. That's a very good sign. And here it is up, gosh, I mean, the NASDAQ itself is just barely green, 0.2%, and the Russell is up 1.5%. That is a big day for the Russell, and that's a very good sign. We'll take a quick look at it here. Didn't intend to do this, but yeah, nice. So what are we seeing here? We've got the uptrending LRC, linear regression channel. We've got the wavy 34 EMA band set at high, low, and close. They're mostly trending higher. We've got market bias set at 100-period look back in dark green. That's excellent. And we've got the oversold stochastics below the 20 line flashing today, a buy signal on that green candle. Now, not seeing a whole lot of volume just yet, but with futures, you tend to get volume added after hours, and so you never really know open during the trading day. You have to look back to the previous bar. This looks good. This looks very good. So we've got some resistance up here at around 2,300. Nice round number. See, we've been up there several times in recent trading. Can't get through. This sequence of higher, where's my marker here? This sequence of higher lows, boom, 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 3 of them in a row, is very good for indicating a potentiality of cracking through. I guess we do have 4 in a row, cracking through that 2,300 level and setting new 52-week highs. We're still well below the all-time high for the Russell 2000. That looks very good. We want to see the Russell happy because if people are buying small cap stocks, they're willing to take on good risk. They've got good sense about the growth prospects going out into the future, and everybody's happy, right? Okay, so there's that. Oil way down. That's not oil. That's gold. Gold doing a nice little bull flag up here at all-time highs for gold, even with the dollar screaming higher. Very unusual to see that. We've also got yields going up. Very unusual to see all 3 of those rallying so strong. Something's got to give. I think it's going to be the dollar falling and yields falling, but that hasn't started yet, so we had to just wait on that. We've got oil down 6% on overnight news that the retaliation of Israel against Iran was not quite as big as people thought it was, and the bombing by Iran of Israel not as big as people thought it would be, and so, yeah. World War III has been postponed another day, and for that reason, oil has come down. We've got yields a bit higher. We don't really want to see that. We want to see our bonds start to catch a bid, because that usually gives us a better macro for the overall economy, for individual companies, and especially for the smaller cap companies and growth names that really need to borrow a lot of money to keep their business going. When yields are going up, money becomes more expensive, and so that we want to see bonds rally and yields come down. Right now, it's just the opposite. We're in Bitcoin. We are in a Bitcoin play that got off to a bit of a rough start, and now it's coming back up, and we're in it. We're in it to win it, and this is that's the line right there that we're expecting to break. It's been coiling up. See how it coils up here? I'm trying to point at the screen, and you can't even see my finger. This little coil right here, we tagged that resistance trend line. The RTL came back down, tagged the top of the 34 bands, right back up again. That's a very good sign. Volume balance has been a little bit mixed, but if we can get a good couple of days of breakout, we're going to see massive short squeeze, lots of good upside potential. We're looking at a near-term target around 75,000, which don't think that's an all-time high, but it is on its way to a 6-digit price limit for Bitcoin, which some people say it's going to happen before the end of the year. I have my serious doubts, but maybe out into 2025, around this time, 2025. Bitcoin, of course, is a good play on a Trump win, and Trump is, I don't know, you'd have to look at which poll he's leading in, but there are some where he's leading. There is some expectation that it will be a Trump presidency, and Trump is positive for Bitcoin, whereas the other group is less positive, let's say. So that's also a good reason for Bitcoin to start rallying ahead of that and into election next week. So there's that. Let's take a look at some of the indexes. The S&P 500, here you have 4 red days in a row. 4 days in which the market, they did just gap up at least a little bit and then rally down into the close. Same thing's happening today. Gap up a little bit, rally down into the close. But generally speaking, I would just call this simple consolidation. These are all-time highs, 52-week and all-time highs for the S&P 500. It's in a very nice-looking, very easy, sustainable uptrend, right? 34 bands are up, the LRC is up, the market bias is up in dark green. Everything is at a 45-degree angle or less, which is very sustainable. Excellent, excellent, excellent. The only thing that I'm seeing here that I don't like is in recent trading, we've had some pretty heavy volume, and those are the gap and crap days. So people are kind of getting a little skittish, maybe a little nervous about the election, maybe a little nervous about all the data that's coming out, which we'll look at in a moment, and some big earnings. So that's okay. Let market makers get out. Let them stand on the sidelines. And then when it starts to rally, on earnings, it starts to rally on a tame CPI, it starts to rally on a good non-farm payrolls, they've got to jump back in. And then they're going to be paying up, and they're going to be paying up, and they're going to be paying up. And that's good for us that are already in. QQQ. So this is a little bit more of a messy chart. It hasn't been as strong as the S&P. Largely because the Mag 7, the big stocks at the top, along with the 3 or 4 others, have been lagging a bit. They've been underperforming. And that's not a bad thing, right? We want to see rotation. So we get those big Mag 7s that have been leading the market higher for months and months. Let them cool off a little bit. Let them consolidate. Let's see some money go back into some of the other beaten down sectors. Energy, healthcare, home builders have been a bit rough lately. And, speaking of home builders now, the 30-year mortgage rate, unfortunately, has tipped back up above 7%. And it was up above 8% not too long ago, and that was the bottom of the big home builders pullback. They were in bad shape. We look at XHB. I didn't want to do this, but now that I'm talking about it, this is your home building index, and when market rates or mortgage rates were up at 8%, the home builders are down here in around $70 per share for the overall index. It's had a great rally. Why? Because rates started to come down, ticking lower and lower. They went from 8 plus down to 5.5 or something like that, and that spurred this whole rally. And then the Fed, a couple of months ago, I think was right around in this area, cut rates pretty big cut, 50 basis points. That brought all the loan rates down. Car loan rates, cars have been selling pretty good. GM just had a very good report, by the way. And mortgage rates coming down, appliance, what do you call it, circular rates coming down. Credit card rates never come down. That's the secret about credit card rates. I remember paying like 12% for the annual credit card rate, and now it's 20-something. I always try to pay our monthly balance off whenever we can, so don't have to worry about that. Anyway, so we want to see yields come down. We want to see lending rates come down, and that will, once we get that, and we really should, soon, we're going to see a really good rally in home builders, in banks, in the car makers, and so on. Tesla's already, I think, starting to price in some of that because it's in rally mode. It's in breakout mode. Okay, let's look at QQQ. We did look at this already, although we're not up at 52-week highs. It's a gap and crap day today. Maybe looking a little stronger in the last two sessions last week, Thursday and Friday, than the S&P. That's a good sign. But you know what this is essentially is a coil not too far from 52-week highs, just under, as it consolidates and prices in a bit of the concerns that people have in the market heading into the data, the earnings, and the election. So this is just a nice little consolidation. We probably won't see it break out today or tomorrow. Give it a couple more days. Let's fill in this little gap right here. And if you want to put on some SQQQ or sell some calls on QQQ or buy some puts on QQQ for just a day or two, I wouldn't kick anybody in the pants for doing that. I'm not going to do that. I think that we'll probably get on Wednesday with earnings. We've got Apple and some other guys, some big guys coming up. Then we probably will see QQQ get back on track. Here's a small cap index. We looked at this already. Nice looking oversold buy signal in play in a nice looking uptrend. Don't see any reason why this shouldn't see some follow through. We are long a TNA in our put selling strategy, the diagonal debit spread strategy. We need to come up with a better name for that, by the way. And so this is all good for us. Take one quick look at TLT, which is your 20-year Treasury bill fund. It's the standard one. You can look at TNX for the yield, but TLT for the bonds. And sooner or later, and I'm hoping sooner rather than later, we should see this begin to reverse. We've had a couple of up days which looked promising. They were down here at the bottom of the LRC in the pink zone, good volume, and just didn't see any follow through. It was a big gap and crap day on Friday last week, and then some follow through today. Here's some good news. We printed as of today, a new multi-week low, and that got rejected. The market said, no, we're not going further down. We are going to bounce back up, and if we can close around 92 today, I think that would be a nice setup for a bounce back next week. We are certainly deeply oversold. We're down into the below, actually, the standard 2.0 deviation. You don't usually see price hang out down at that level for very long, especially after printing. Look at this guy up here, up into the top of the LRC just a few weeks ago, all the way down to below the LRC. That's a lot of pressure on bonds. And the same thing is happening in the opposite direction with yields. What is that? Well, that's fear around the election. It is a dollar rallying hard, and it is fear of inflation. Don't know exactly, but man, it's just, I mean, there's nothing too terribly wrong with yields being strong going out, but there is something wrong with bonds being weak, because bond is like the bond market is an election on the forward-looking economy, the strength of the economy going forward. And if there's just not enough confidence to take on a 5-year debt or even a 2-year debt, a 10-year debt, a 30-year mortgage, a 15-year car loan. Are there 15-year car loans? I don't think so. Then that's a real negative bet on the market, and we don't really want to see that. We want to see confidence. All right. Let me show you a few greens, some of my greens list. Actually, before we do that, let's jump over to FinViz. We'll take a quick look at what's coming up next week. So really nothing today at all. Tomorrow we get a consumer confidence, which is kind of it doesn't necessarily sway the market too terribly. But because it's a jobs week and because job openings can give us an early glimpse at what the Friday numbers will be, this will be pretty closely watched. So that comes out at 10 o'clock along with consumer confidence. If both of those are bad, we probably will see more selling pressure. If we come in with a consumer confidence above 99, which is what's expected, and we get a JOLTS above 8 million, I think we'll see the market go back up tomorrow. We've got the ADP, also an early read on jobs coming up Wednesday before the bell. We've got GDP, all important. The chain deflator, which is a read on inflation. We've got that. And then we've got pending home sales is just kind of a modest one. On Thursday, we've got the initial claims and the all-important PCE prices, which is your read on inflation, the one that the Fed prefers. So if the Fed is concerned about inflation and if they feel like they maybe cut too far too fast and they may be still thinking about 2 more cuts by the end of the year, that will be confirmed by that PCE price. 9:45, we get a PMI read, which can move the tape a bit. And then on Friday, we get all the jobs data, and that will certainly move the tape. Now look at this. We get non-farm payrolls. We get hourly earnings, that doesn't matter. The unemployment rate, that's huge. We don't want to see that tick any higher than 4.1. And then the manufacturing PMI, not a real big number, but it will be an early read on that segment of the economy. The manufacturing ISM will move the tape, however. Now, the manufacturing ISM, not as important as the services ISM. That will come out next week, but this one will move the tape because it's a read on the nuts and bolts of the economy, right? Okay, so and the ISM, anything below 50%, by the way, is a contraction number. It means that things are getting a little smaller, not as productive. And so anything above 47.2, which was last month, should be a pretty positive read. We want to see things moving in that direction. Earnings. Let's take a look at earnings. We go to homepage. We go to see what's looking at today, and then we go to this week. Apple. Look at all these guys. These are the big ones. Apple, biggest company in the world. Microsoft, second biggest company in the world. Google, third biggest company in the world. Amazon, Facebook, biggest drug maker. Lilly, biggest financial play. Visa, XOM, the biggest oiling play. MasterCard, right? CVX, AMD, also McDonald's, also Caterpillar, Amgen, all the big guys, many of which are in the Dow Jones and the S&P, and some are in the NASDAQ 100, are all reporting this week. That is going to be huge, huge, maybe more important than the economic data, the inflation data. So the market could go all kinds of different directions. We will probably see some heightened volatility both to the north and to the south. But I do think, given the trend, given the potential of a better economy over the next few years, and given the growth names that we've seen report pretty well over the last few weeks, we should get a resolve to the upside. That's my best estimate. All right. But as always, we trade the market we're given, not the market that we want. Now, let's go back to charts. I want to just run through these real quick. Hack is your index for cybersecurity plays, and we have been looking at this. Got a little bit of a bounce last week down into the midline of the LRC. Not following through today. We are long PANW, which is one of the top plays in this space. But wouldn't mind throwing on something like Crowd or Fortinet. Fortinet is one of my favorites. CRM, we are long CRM, both shares and calls on nice. This is just good. This is just a good chart altogether. Now, it's been a little bit of a laggard. It hasn't been that exciting lately, but its main competitor, NOW, ServiceNow, reported huge earnings growth, shot way up, and so CRM is likely now to get excited about the same thing heading into its earnings, and its earnings aren't until the end of the month, end of next month. So we've got some time to hold on to our calls, and so far so good. This is looking good, very, very good. Now, 310 is going to be a problem. It shouldn't get up above 310 before earnings, maybe not until after earnings, but if we can get up above 300, we'll probably start to take some profits off the table. We just sold out some AMD today because it is reporting tomorrow night. We had a decent profit on it, didn't want to add too much risk. I'm wanting now to play this week, not so much with individual names because we're also long Apple and we're long Facebook. I want to take some of those profits off the table, if not all of them, and roll some of that into a leveraged tech fund. There are several to choose from. We can go TECL, which is the 3X version of XLK. We can go TQQQ, NASDAQ 100 leverage. We can go with FNGU or BULZ, and there are several FANG funds like those that are good mixes of the top 15, the top 12 stocks that drive the whole market. So we'll do that small because of the potential for earnings to throw a big screwball down the center of the plate. To use a baseball metaphor, here we are in the middle of the World Series. Go Yankees! I'm not a big Yankees fan. I'm just not a Dodgers fan at all, so I'm rooting for the Yankees, and they haven't been doing very well so far. Okay, so let's look at some charts here. Rising LRC, green market bias, and oversold stochastics. If you find those three things, put it on your buy list. It's not a buy until you see a buy signal, and there's no buy signal here yet. I like Shopify. Still a little ways to earnings. Falling below the 20 line, uprising LRC, uprising 34 bands, market bias is dark green. We do have a little bit of an inside day bar today after a pullback, and that's probably going to be the bottom for the next bounce. I like that. Facebook, we're already long Facebook. We got in over here on that little reversal bar, and that is almost a classic reversal bar, which is to say that it opened within the range of the previous day. It traveled south, printed a multi-week low, and then rallied back up to close above the open, green candle, within the bar of the previous day. That's your classic reversal bar, and we're only seeing upside from here. AFRM, a good play on falling rates, rising loan rates for big appliances and so on. This is what a firm does mostly, and this is a good looking reversal. So uptrending LRC, green market bias, oversold stochastics, and a green candle today that actually had some good momentum early on. Excellent, looks very good. You could buy that one right now and I wouldn't kick you in the pants. I like ARM. It's been one of my favorite IPOs all year. It had a really rough go, starting to recover. Still not a great looking uptrend just yet. LRC is falling, but we're starting to see some constructive action, that is higher lows and higher highs, with a pullback into the bands and a bounce and a very good day today in a fairly mixed tape. NEE, we were in this one a little while ago. We took our profits just in time before that big crash, and it bounced off of that, and it looks like it's printing a higher low. It looks like this one is kind of ready to go again. And we're past earnings, so you can hang on to this one for a while. This one actually has, I think, has weekly options, and so we could do a DDS on this one. We do have a DDS on PANW. Not a real good day today, but it's had a good week. We're not too far from our short strike put strike, but it needs to get up a little bit. It needs to get up above 365. So we've got the oversold stochastics. We've got everything uptrending. We just need to see this print a buy signal. Maybe tomorrow's the day. Chewy, kind of a weak uptrend. It's all the way down into the pink zone, which can be a little bit problematic. And when it gets all the way down to the pink zone, it tends to linger down there for a while and not get to the upside. And this is not flashing a buy signal just yet, but keep an eye on it. I do like this one. Big upside, and I have no idea why it shot up higher so much. Some of you maybe know the reason for that. We were looking at this when it was doing that, and I'm totally blanking on why. But it knocked out the 52-week high, pulled back into the top of the bands, printed a 3-bar buy signal the other day on Thursday, and then it's been a couple of gap and crap days ever since. So maybe not ready to go just yet, but it is setting up quite nicely. Avgo, I like. It's my favorite play in the fabulous space. We just need to see a buy signal. We don't see it. We did go long this bank, and it's up at the top of the day. Nice looking uptrend. Really strong momentum play here with lots of breakout that just keeps going higher. Right? Usually you get a breakout and it gets a little bit above the previous high and then it pulls back in to retest. This one just keeps on going, and now we're printing a nice, much higher low at the midline, oversold stochastics. This just has buy me, buy me, buy me all over it, and we're already long. SHAK is breaking out today. It got a couple of big upgrades. It's got earnings coming up. We don't want to buy ahead of earnings. But what I wanted to show you on this is that it is printing a continuation bullish, very bullish, head and shoulders inverted buy signal. On the breakout, that's a continuation pattern. And even in the right shoulder, we have something like a head and shoulders, kind of. It's not really that well formed, but it is there. Head and shoulders on top of head and shoulders is really a nice looking setup, technically speaking, but don't buy it until after earnings. Squarespace, breaking out of the near-term 6-month or 5-month highs, pull back to retest, and then nice looking move today on very good price strength. Also with Squarespace, we're seeing some very good insider buying. It's not really a factor that plays into my trading system so much, but when you see it, you note it and think, okay, that's another reason why we can be bullish. Apple has earnings in 2 nights. Not going to buy it here, but I love this setup. We are long Apple. I want to take profits before they can be somewhat problematic like they were last time. Even though it was a very good earnings report, it was a big gap down. We don't want to do that. So I'd rather roll out the profits and put it into something like TECL or otherwise. All right, so let's talk a little bit about selling rules, and then I'm going to have to let you go. I'm sorry I can't do chart requests today because we've got a late start, and I need to make sure that I have at least 45 minutes of trading time before the bell. So let's say that you bought this little dip right here, right? It's maybe not the best one, but let's just say that we bought shares right there. Where are you going to put your stop loss in case the trade goes against you? Well, if you bought on this green candle, you could place it just underneath the low of that day. Better yet, place it under the low of the previous day. That's a little bit further down, gives you a little bit more space. So you would put your low around 213 and change, and then you would simply trail it up. So on this day, you would move it up to just below the low of the previous day. And when it's way up here, you would put it under, well, you wouldn't even have to put it there. You could put it underneath somewhere in that gap. Gaps do not tend to fill right away. They stay open for a while. And then you get way up here, and then somewhere in here you would probably stop out as you kept trailing your stop loss higher. You would stop out with a profit, a nice profit. So that's one way of working your stop loss. I tend to do things a little differently. I do kind of drill down into the hourly, 2-hour charts to try to find some intraday ranges of support. I also look at trend lines, and I look at horizontal price channels for where to put my stop loss. And sometimes I'm even just looking at like a 15-minute chart and for something really tight. So that's how I prefer. I'm more of a low risk guy. I'd rather suffer a little bit on my win percentage and not have to suffer drawdowns as much with tighter stops. So, but as far as selling out when it goes in your favor, well, you can do a couple of things. You can set a target price that would usually be a line of resistance. This is a very clear line up here, which eventually did hit, right? You're playing off of that pivot high, which was a very clear pivot high. It got back up there a couple of times. So if you bought it down here and you held through this pullback, that would be your target, and you're out at the target. So you had to wait a little bit longer. You know, you kind of have to weigh the, where are my hands? There are my hands. You have to weigh the cost benefit versus the benefits and costs, weigh them on the time that you're in the trade. You want to make sure that your trades are usually giving you money quickly. The longer you're in a trade where it's not paying you out, you're just losing time, you're wasting time. And, you know, we as traders, we need to make a living from our trading, and so we want to make as much money as we can in the least amount of time. And you don't want to get stuck in something that's just lounging around. Give me something that's going to work for my money. And so you got to be a little careful of that. But if you were patient with this one, you would have had a higher outcome than my method of just moving the stop up very aggressively. So pivot points, prior pivot points can be a place of a target. If you're looking at the linear regression channel, let's say you bought down here in the pink zone, your target, if you're just trading standard deviation, is the blue zone up here at the top, the 2.0 standard deviation. We're not there yet. So if that's your case, you would, if you had a wide stop, you would still be in the trade and you're waiting for this to get up into the mid 240s. That could be your target. And a third way of looking at, so price channels or trend lines, there's my finger. Price channel or trend lines, standard deviation, and the third form is to look at Fibonacci projections. You've heard about Fibonacci retracements, right? You can measure how far a stock pulls back after trending higher. Well, the projection is a little bit different. You look at a previous trend and then where you got into the trade, and then it projects prices higher for your potential exits. Let me show you how that works. All right, let's say that we bought down here at the bottom, and we're looking at, let's just mark this first trend right here. Sorry, I kind of did that wrong. Let me do this all over again. I apologize. In order to make that our entry, we have to go back to the trend prior to it. So let's put on our Fibonacci projection. You look at the nearest uptrend, you pull it back to your entry, and then it gives you, very nicely, it gives you these projection levels. So the 618 might be your easiest, nearest target. You've already hit that target. It's also just below a resistance trend line or a channel line, and that's a very good place to get out. If you want to hang on a little bit longer, you've got 1.0 projection Fibonacci. That's way up there at 248. So that could be the ultimate target for this uptrend before it has any sort of a major pullback, and that's what the projection numbers are telling you. Right? You can go somewhere in between. So this is sort of your obvious one, 618. 1.0 is your long-term projection, maybe somewhere in between 241, 241.50. That is where you would put your target order, right? Good till canceled, get out, whether it's open market or closed market, just get me out at that level and let it run. Let it keep going, but keep your stop at a reasonable place. You'd have to keep it below that trend line in order to not get stopped out. Okay, so that's it. I'm sorry, we're done. Okay, so I'm going to let you guys go. Have a great rest of the afternoon. I will see you guys back in the room in just a little bit, and we'll close up today's market. It's been a pretty good day for us. We've got a lot of profit on the table, even though the market's been a little bit squirrely today. God bless. See you soon. Bye for now.